All right, everybody, welcome back to the Dividend Doggo Show on YouTube. I'm bringing you into the weekly review of the portfolio, see how it did this week. We are straight into the 1 week. As you can see, the portfolio was significantly green this week, which I'm exceptionally happy to see. But it does mean that those beautiful stock purchasing options where it was in the red are starting to kind of fade away this week. So I hope that you all went in and you made some purchases early on in the week. This is overall turned around pretty significantly. You can see VST was up pretty wildly. The energy sector was up pretty significantly as well this week, with PSX being up nearly 13%. EPD was up 7.8% this week. So there's quite a bit to unpack here. Overall, very green week for the portfolio. Almost every stock in the portfolio was in the green this week. I do want to take a moment to say thank you to everyone who has liked, commented, subscribed in the past. If you let me know what you're buying, I'd love to know. I'm super curious what everyone's doing in the community. We're now over 1,000 subscribers strong, which is absolutely amazing. As you know, I'm just a guy showing a stock portfolio growing here on YouTube. It's not really financial advice, as I'm not a financial advisor. You're just watching my journey, and I hope that you are taking a journey of your own. Overall, if I could say to buy one thing, it would be index funds and invest diligently, choosing low expense ratio index funds. But looking at the portfolio, you can see I have a lot of different sectors, all of them being green. Some of these only have a couple different stocks in them, like healthcare only has AbbVie and Johnson & Johnson, for example. High conviction play for me with AbbVie. As you can see, there's a large chunk of the portfolio there. With utilities, it's a very similar situation. There's only 3 stocks in there, but the majority of it's in VST. So I kind of lean toward building up larger positions as we invest more and more. These positions will continue to grow and go forward from there. So overall for the week, very fantastic week. The market overall was just very highly performing. We only had a couple $100 worth of earned dividends rolling in this week. However, the capital gains were really nice to see, because it always feels really bad when the market is red week to week, and it consistently makes you feel like the market is just going down. But over 40% of the days that the stock market is open and trading end up being red days. So you have to take that for its face value and know that as long as you're staying invested, the majority of the time that you're invested, you're going to see these green days come in, and your portfolio is going to continue to grow. So my message today is that if you're actually seeing people say that the market is crashing, look into why and what it is they're saying is going to crash about the market, because historically the market has grown and grown very, very well for investors that have held on for the long term. And that's really the key to success, is not selling when you think the market is going to be very, very red. So with that said, let's take a look at the buys for this week. We have Bank of OZK, which has its ex-dividend date rolling in here really soon. I did pick up a couple more little shares of this. This was a dividend-fueled purchase. And then BST came in with a $677 purchase for a total of 13 additional shares. BST is a monthly paying stock that is kind of one of those income funds. I believe the yield is right around 5% right now, and it is a high expense ratio income fund, but it is a monthly payer, and it's done very, very well for me over the past, I believe I've held it for about a year and a half. Let's go take a look. So we started buying it actually when the portfolio was started August 6th, 2019. And you can see I chunked some money into it and then chunked some more into it in June. And overall, it's just consistently kept rising and you can see we did the equity offer purchase right in there, and then did another buy today. So you can see my cost basis is relatively low on this. It's right around $40, and it's sitting at 52.22. So overall, it's up pretty hefty. Right now, the dividend yield is sitting at 4.61% with an expense ratio of right around 1%. This is not necessarily a good starting position for someone to grab. It's more of just kind of a balancing act in getting monthly dividend income. The other one in there that I'm really interested in doing some more digging on is Stag. I want to kind of add to that position and kind of build that up as well over the next few months. So as you can see from all time, we crossed over the 33,000 in earned dividends in just over 2 years. So I'm really curious to see how this keeps going, because right now the projected forward income is about $23,000 per year on this portfolio. So I'm hoping that I can get that averaging up as the dividends continue to grow and keep coming in. The monthly and the yearly income will just continue to keep growing and growing. And hopefully this portfolio, the goal of this portfolio is to achieve FIRE by 50 years old, which I have a little bit more than a decade to do. So I'm pretty confident that this portfolio can achieve that, as we're sitting just below the $2,000 a month average in income for this portfolio right now. And all of that money is reinvested into the portfolio, so it is compounding with the gains that I'm throwing in as well. So overall, be diligent, be investing, make sure you know what you're investing in, try to diversify it. And if the best path, in my opinion, overall, is to just dollar cost average in when you have the money into index funds. There's a lot of different funds that you can go ahead and look at. I prefer SCHD, QQQ, SPY-G. Those are just several of the funds off the top of my head. Those are the way that I would start investing if you're a newer investor and you want to get started in the game today. That's the route that I would go. I would basically build a portfolio, and I have a link in the description. I would go with a dividend growth fund, especially if you're younger, and then I would also go with a growth fund, being SPY-G or QQQ. So down below in the comments, you'll find a link that has a portfolio. I believe it's called Whitefin Streams, and that's basically my nod to all the other millennials out there that dream of one day having home ownership. The path that I went through to get this far, so that if you're new to the channel, because we've had a lot of new additions over the past couple months, I built initially a real estate portfolio, and I've been slowly transitioning that by either selling properties or doing cash out refinances on the properties that we own and had paid off to fund the portfolio more rapidly. So that's how you can see this portfolio started with a deposit of about $16,000 just over about 2 years ago. And then I just consistently chunked in money and continued to chunk in money and just keep growing it and growing it and growing it. And compounding growth with the dividend strategy that I have for this portfolio. The goal initially was to get to this portfolio making about $80,000 a year in dividend income. That basically will allow us to sustain from 50 years old until we can get access to our 401k funds. And that doesn't mean that we're going to just initially take from the 401k funds, but I would like it to be able to float that difference. The average household income, is lower than the 80k mark. So I think that strategically it's a great play to build something that's throwing off passive income. And we are working with real estate holdings as well, which means that as we get closer to that retirement fund, we'll likely end up wanting to pay down or pay off the majority of the principal or refinance those properties so that they're flinging off a little bit of extra cash flow as well. Ideally, somewhere in the $25,000 to $30,000 a year range from the real estate portfolio would be fantastic. And I think that that's pretty easily achievable with our current savings rates. And that's what's really important when you're first getting started, is figuring out what you can save and challenging yourself to save more. Even if you start with like a 5% savings rate because that's all you can do, and you try to increase that just 1% a year, after the end of that 10 years, you're now saving 15% of your income. And I prefer to look at it from a gross versus a net. I prefer to save before the taxes come out, primarily because of the fact that you need to put your best foot forward with investing at all times. And by doing as much as you can to invest more early on, you see the growth and the potential of a portfolio, and it's absolutely just addicting when you start seeing dividends rolling in constantly. So the true key there is to be consistent, make sure that you're rolling your dividends back into dividend paying stocks and continuing to grow your portfolio over time. Overall, this is going to allow you to compound that year on year and continue to grow, because you're having two different things work for you there. You're having the compound annual growth rate of the dividend grow, which is going to give you more in dividends. And then you also have the dividend purchasing more shares of stock, meaning that you're going to get even more dividends than the last year, both by the gains of the dividend growth and by the fact that you're adding more shares consistently over and over and over again. This allows every month to continue to grow and every quarter to continue to grow even more and more. It's just an absolutely amazing concept, and you just will get there so much more rapidly than you think you will, as long as you're being consistent with your investing. I do want to take a moment to thank you for watching this far into the video. Drop a like if you like the message. If you love seeing that dividend money roll into the portfolio and me buying more stocks every week, drop me a comment below. Let me know if you bought anything this week. Hopefully you bought it early in the week while it was still, slightly red or a little bit rocky. Hopefully you got the best price, or a price that you're comfortable with for the stocks that you wanted to purchase this week. Drop me a comment and let me know how you're doing. Anything you say is just fun for me to interact with you in the community and get to know everyone a little bit better. And if there's something specific that you would like to see in the portfolio, let me know and I will try to incorporate that into another video here. Thank you very much for watching. This has been Dividend Dogo, and have a great weekend.